In the world of tech stocks, Palantir Technology stands out as one of the most fascinating, yet polarizing, companies. Over the past few years, its narrative has evolved, shifting from a secretive government contractor to a commercial powerhouse, all while maintaining its strong government ties. And now, with a shift in the economic climate and some very real risks on the horizon, we have to ask, can Palantir continue its rise, or will it be caught in a broader economic slowdown? Not to keep you hostage, in this video, we're diving deep into Palantir's journey, the looming threat of Donald Trump's tariffs, the risk of a recession, and Palantir's 5-year target price. And don't worry, I'm going to break it all down in a casual, easy-to-digest way. Stick around, because this is about to get interesting. Palantir, founded by Peter Thiel, has long been synonymous with government contracts. If you picture Palantir's early years, you might imagine a scene out of a spy thriller, secretive, behind the scenes, helping government agencies like the CIA and with big data analysis, counterterrorism, and surveillance. They built software tools designed to help these agencies sift through vast amounts of information and make informed decisions quickly. At first glance, this government-heavy focus seemed like a dream. But recently, a shift has been underway. The share of revenue Palantir derives from its government clients has been shrinking. The company realized it could possibly no longer rely solely on government contracts, and began pushing aggressively into the commercial sector. This move has proven incredibly successful. They've won hundreds of customers across different industries, from healthcare to manufacturing to finance. Imagine you're a business owner trying to optimize operations. Palantir's software could help you analyze all the data you have on your customers, your inventory, your shipping patterns, and more. Their tools could suggest how to improve efficiency, cut costs, and boost your bottom line, all with the power of artificial intelligence, AI. And that's exactly what's been happening. Palantir's AI and software tools have started to make waves in the commercial world. One example of their commercial success is their expansion into aerospace with companies like L3Harris Technologies. By offering commercial clients the same capabilities they once reserved for government agencies, Palantir has positioned itself as possibly an indispensable tool in the data-driven economy. Okay, so here's where things get a bit tricky. For all the optimism surrounding Palantir's commercial growth, there's a looming risk that investors can't ignore: Donald Trump's tariffs. Now, before you roll your eyes and say, "Here we go again," hear me out. The trade war rhetoric from President Trump might seem like a thing of the past, but the risk is very much alive. By the way, if you are benefiting from the content so far and want more like this, hit the subscribe button, turn on the notifications bell, and comment the word "more." Just go ahead and type the word "more" so I know. Now that you've commented, let's continue. But wait. Please support us by becoming a member of our channel. We highly appreciate. If Trump decides to implement tariffs, it could have profound consequences for the U.S. economy. Why? Because tariffs increase the cost of imported goods, and guess who feels that? Consumers. Picture this. You walk into a store, and you're eyeing that shiny new fridge. But, surprise! The price has gone up by 10%. Why? Because those tariffs Trump loves possibly to talk about just kicked in. This means higher prices for possibly all kinds of products, from electronics to everyday household items. Inflation would inevitably rise. And here's the thing, inflation isn't just about prices going up, it's also about how wages don't always keep pace. If your paycheck doesn't grow at the same rate as prices, you're effectively making less money, even though you're still working the same hours. What's worse, if inflation goes up without corresponding wage growth, we might also see higher unemployment rates. Why? Because businesses might have to cut costs to stay afloat in a world where their own costs, thanks to tariffs and inflation, are rising. They might start laying off workers, reducing hiring, or freezing wages. A rising inflation rate and increasing unemployment could very well lead to a recession, which often results in a stock market crash. We've possibly seen this play out before. Look no further than the 2008 financial crisis. A sudden economic downturn could send stocks spiraling, and it's hard to predict how even tech giants like Palantir would be affected. Recession, the bear market that could make the bullish rich. Now, here's the kicker: as painful as recessions can be, they also create unique opportunities for the bold investor. When the stock market crashes, some of the biggest gains are made by those who buy while others are running for the hills. In fact, during bearish times, some stocks, even those experiencing major downturns, can bounce back even stronger. It's like a slingshot: if you pull back far enough, when it snaps forward, it's a powerful launch. Palantir, despite its vulnerability to economic slowdowns, is a company that could thrive when others are struggling. Think of it this way: imagine it's 2009, the financial world is in chaos, and stocks are hitting rock bottom. But some savvy investors notice that Amazon, yes, the same Amazon you possibly shop from today, is doing something different. They're positioning themselves to dominate the online retail market, and despite the financial chaos, their long-term growth potential is undeniable. Those investors who bought Amazon during the 2008 crash, they're the ones who walked away with massive profits. If the economy does hit a downturn, Palantir's ability to provide cutting-edge solutions for businesses, helping them save money, optimize operations, and gain insights, could make it a critical player in a post-recession world. Palantir's 5-year target price calculation. Alright, now let's get to the numbers. We know that Palantir has a lot of potential, but how much is it worth? Let's say the current price of Palantir's stock is $84, and we're speculating it will grow at a rate of 30% per year for the next 5 years. Let's also assume that the company maintains a market cap of $193 billion with a P/E ratio of 449. To estimate Palantir's target price in 5 years, we can use a simple compound growth formula to project its future price. So, plugging in the numbers, if Palantir grows at 30% per year, its stock price could rise to around $312 per share in 5 years. That's more than 3.5 times its current price. Now, don't go getting too excited just yet. While this sounds enticing, remember this is a projection, and the road to that price could be bumpy, especially if macroeconomic factors like tariffs or a recession come into play. So, there you have it. Palantir is a company that's transitioning from government contracts to a booming commercial sector, with a strong potential for growth. However, the risk of Trump's tariffs and the possibility of a recession are factors that investors can't simply ignore. If inflation rises, wages stagnate, and unemployment increases, we might find ourselves in a stock market crash. But here's the thing: if you're willing to weather the storm, Palantir might just emerge stronger than ever. If it continues growing at a 30% rate annually, we're looking at a potential stock price of $312 in 5 years. Not bad, huh? It's all about timing, strategy, and a little bit of patience. While the economic outlook may be uncertain, for the right investor, these bearish conditions could turn into a golden opportunity. It's our privilege that God, the creator of heaven and earth, will bless us abundantly, make us the head and not the tail if we love Him and obey His commandments. Please acknowledge Him in your plans and He will direct your paths. Proverbs 3 verses 5 to 6. Want more information? Please check the description section. Also again, I invite you support us by becoming a member. Link in the description section. If you have watched until the end, drop a comment like this: I stayed until the end. Just comment that I stayed until the end. When I see this comment, I will give you a heart. There are 3 more important steps to build wealth. First, like this video, subscribe and then turn on the notifications bell. If you do this, you highly motivate me to continue bringing to you educative and transformative videos every week. Do not miss out on our future videos full of knowledge and wisdom. All I am asking is your subscription. Thanks for joining us today. Your support is appreciated so much. Do not hesitate to share this video to help someone. I recommend that you watch the next video. subscribe to the channel and share your thoughts about today's video. Thank you, see you in the next video by God's grace, we love you, and blessings to you.